Hey guys, welcome to today's session. I'm a little bit delayed today, so I apologize for that. I'm about 10 minutes late. I'm just going to get all the links to this session sent out because I think yesterday, I don't think it posted on Twitter the way it should, the way it normally does. So if you just bear with me for 2 seconds and then we'll jump straight into the session. Just check and see if it's posted on Twitter as it should. That's also the wrong thing. There we go. Bum, 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 bum. Yeah, this is odd. This is, for some reason, it's not. We're live on Twitter, but it's not posting it on Twitter, which is strange. So I'm gonna have to manually post it. That should have done it. Let's see. Just realized I'm sharing my WhatsApp there. So yeah. Okay, welcome guys, welcome. Yeah, for some reason, I mean, there's 9 people here now. Usually we have like 100 within the first couple of minutes. So there's definitely something going wrong with the way these sessions are being posted. And I'm not 100% sure why. Let me repost them from my personal Twitter as well. Tell, hello, handsome. How are you doing? I'm all good, my friend. I hope you are too. Bit of a tough day for me to in the markets. I'll be completely honest. But other than that, I'm so confused. It doesn't look like we're live on my personal Twitter, which is a bit of an issue. No, it does. I don't know. Oh well, we'll jump into the session anyway because no point losing sleep over something. I'm gonna have to have a check, afterwards why it's not posting the way it usually does. But it is what it is. Tail, you can never get as bad as mine. Oh God, we'll have a look. Rob, hey bud, how you doing? Let's go. Oh, that's just my. I was doing a mock assessment earlier for my IMC, and yeah, didn't go too well. Or at least the first set of answers I did didn't go too well. WXBY. Oh no, I've had a worse day than you. I mean, to be fair, your Feb's not been that bad so far. How about XXBI? Did you end up cancelling XXBI? Oh, dude, that's vicious. What on earth have you been doing? Are you sat in gold shorts or something? Yeah, I bet you're just sat mega offside, right, and not closing it, because that's a nasty drop off. I know we spoke about this privately and said that you was testing some new things, but might be time to pack in that account potentially, or get a booster and then hopefully work your way out of it. SPWR looking like it's starting the nice recovery. Do you know what, Rob? If it wasn't for this big down day you had here where you lost like 5%, this actually wouldn't even look too bad. So I would be trying to block this out of kind of my memory, and focusing on the recovery and not what's happened over the past couple of months. Also, I'm getting these. I still got these white lines in my background. I don't know how to get rid of them. Yeah. Are you saying few as in like few, or few as in that's a Darwin name? Is it your second Darwin or something? No, it doesn't look like it is. Maybe he was just saying it because it's like one of the relaxing things. Yeah, phew. Yeah, XAQP is down 0.62% today. A bit of a nasty one. I was in some gold longs. In fact, I'll show you on this one because I can change the charts. So I was in dollar yen shorts, spiked up to my stop, and then, you know, back around my entry point now. Is what it is. That's a low risk system anyway, so I'm not too bothered. But you guys might remember I turned gold off for a period of time because of ATR being large, and I have some ATR based stops on gold, so I didn't have enough margin to trade it. I ended up turning the strategies back on a couple of days ago, and then just got absolutely blasted today. So I was in two longs, was in profit, it was looking nice, and then nowhere on NFP, I think it was. NFP, yeah, I think that was NFP. Just absolutely blasted me, and then, you know, continued grinding lower. So it is what it is. You know, we all have these days. I'm not too fussed. This is why I trade a multi-strat portfolio, so that we can recover easily. I mean, down 0.83% on Febs thus far, but after a 6.5% Jan, you know, it's kind of not too bad. I'm not too bothered about that. Yeah, fuse and few. You laughed when you bought mine. Yeah, I keep an eye on everybody's Darwins. To be fair, I like to know how everybody's doing. The guys who come to these sessions. So we're going to start today taking a look at the crypto market first and foremost. So it feels like ages ago, although it was only a couple of weeks ago, we were looking at this sort of price action in here. Now, I'm going to preface this with the note that I do not trade this. I do not, as in, like, I don't intraday trade crypto. I don't discretionary trade it. Or any market for that matter. Everything is all within my multi-strat portfolios. However, I still analyze the markets to know where we are, where we're going, and to just kind of stay sharp. With assets like indices and crypto, I do invest, so I'm always looking at levels. So you guys know I have all my levels marked out on specifically Bitcoin and ETH, but some altcoins that I'm looking at as well. I'm less bothered about levels on the S&P. I'd rather just, you know, put money away each week, each month, and just kind of accumulate that over a longer time horizon. And when I say longer time horizon, I'm talking like 10 years, 15 years, 20 years. Now, if you guys remember a few weeks ago, I called this level perfectly. I didn't short it because, again, I don't trade. But I said this is where we're going to have some problems, and we've just absolutely caked it since then. Now, I've started DCAing back into Bitcoin and Ethereum. This doesn't look too promising to me, I'll be completely honest. I've been around in crypto for 10 years now, on and off over the past couple of years, but I've seen this time and time again. And whilst we're, you know, 50% down from all-time highs, the way that we're looking now just doesn't fill me with confidence for any specific sort of bounce. We come back to mid-range here, so I'll just delete that line for a second. These are my two. These are the red lines are the areas where I'm looking to DCA in. Okay, so my first entry was sort of 70. It was 73.8, but the brokers or the exchange quoted me 74.5. Crypto brokers or crypto exchanges are just awful at price quotes. But now with the way that we snap back on this day and then have just sold off since, to me, and I could be wrong, but I think we're coming straight down here soon. I think it will be a quick move. I think we'll wipe this out here. I think we'll touch this level, and then we'll probably bounce pretty sharpish again. I'm going to be hitting the bid at 50K with as much liquid cash that I have as possible, keeping some dry powder just in case we get down to 32K. Is it highly improbable? Yes. Could it happen? Maybe. Who knows? I'd like to have some spare powder set aside for that point in case it comes. Ethereum, the same. I mean, Ethereum chart is quite disgusting. Let's jump onto the weekly. Like, we have this huge double top here from, what year was that? 2021. I remember riding Ethereum up in 2021. It was just insane. We took that high mid-2025, and it's just sold off since then. Now, there's a big narrative at the minute. Vitalik Buterin is selling his Ethereum, or has been selling his Ethereum for a while, to fund new projects. And so really the only thing that's kind of like keeping Ethereum alive, in my opinion, is the fact that it is a massive chain. What do we have? So if we take a look at DeFi Llama, we'll stick it on stick it on all chains. So across all chains, there's 95 billion or $95.5 billion TVL in DeFi. If we narrow that down to Ethereum, there's 54.63 billion locked in Ethereum, which means it has over 50% kind of monopoly on all DeFi or all chain activity. If we add, let's add a couple of metrics. So if we add transactions, if we add active addresses, yeah, I do have Trading 212, Rob. I also have Robinhood and Moneybox as well. So I invest weekly into Trading 212. I invest weekly into a Moneybox cash ISA, and I invest weekly into Kraken. But then all of my crypto I transfer to my ledger. Stablecoins market cap. So we're going to take a look at a couple of metrics here, and I appreciate this might be new to some of you guys who aren't necessarily active in crypto or haven't been active in crypto in the past. So I will try and, if you have any questions about what I'm talking about, please just let me know and I'll kind of try and go over them in a little bit more detail. So we've added a few metrics to this chart. We've got TVL, which is total value locked, i.e. how much capital is in the chain? How much capital are people actively using, whether it's investing in or using protocols on the network? That is this, is there an easy way? I don't even know if there's an easy way to turn them off. Oh, crap. Yeah, you just have to click it. Which one was that? Stablecoins. So anyway, that's the big blue line here. Okay. Then we have transactions, and you can see this is going back from like 2016, 2017. So the transactions is the histogram in the background, and you can see recently the transactions is at a new all-time high. I mean, you can't see it. I wonder if I can zoom in. Maybe that makes it a little bit easier. I don't know. But the transactions are still increasing. We have the stablecoins market cap, the market cap of the stablecoins, so essentially how many stablecoins, i.e. dollar-pegged coins are on the network. And you can see that's also at an all-time high at $165 billion. Now, usually what we see with that is when the stablecoins market cap is increasing, but the price of the token, i.e. Ethereum, is decreasing, and the stablecoins aren't being pulled off of the chain, it usually means that there's the people who, or the big players on that chain, are waiting to reinvest or waiting to load up on something else. So it's not necessarily a sign to buy, but it is a sign that people are still active, people are still waiting, and the amount of stable coins that people are sitting on is growing and growing and growing, which is fantastic because it's showing that ETH isn't a dead chain. And then lastly, we have the purple histogram in the background, but we can't see that, so let's turn everything off. Which is active addresses, and you can see recently there's been quite a big spike. Now, this isn't necessarily a bullish sign, like as in you wouldn't just go, oh, well, there's more people active, therefore price is going to go up. Because, and I've said this for years, specifically in crypto, is a lot of crypto people or crypto guys think more activity equals bullish price action. And whilst, yes, maybe that is kind of the case long term, it also increases like more awareness to institutional players and people with big pockets. They are smart. Activity doesn't mean that they're just going to buy. For every one of these transactions or active addresses, they might be selling coins that they bought 10 years ago. Maybe not with ETH, but just in general. So it's not necessarily a bullish sign, but what I'm looking at here specifically with Ethereum is I want to know, is Ethereum still growing? Is the chain still growing? Are things still being developed? I'm not sure if we can see the active developers on here. I can't remember which. Is it Glassdoor? Developers Ethereum. I can't remember the one I used to use. Here we go. Full-time devs, 3,770 developers full-time on Ethereum, up 8.7% full-time in the past year. I mean, to be completely honest, I don't know how accurate this data is. Rob, I hate crypto, not gonna lie. I mean, it's a very broad statement, I don't think it's fair to say that you hate an asset class. That's like saying that you hate metals or FX, or like, it serves a purpose, just as any other asset class does. It's highly volatile, which is a benefit and a curse, I guess, if you can sit through the volatility. It's rare that you're going to get returns like this from buying and holding a stock. Of course, it does happen. Is the risk high? Yes, of course. Am I an advocate? Not really, unless you know what you're doing. But I spent years full-time in crypto, working on different DeFi projects.
Motion detected at the front door.
Alexa, volume down to 1. Thanks, baby girl. I used to work on different DeFi projects. I used to consult different DeFi projects. We're going back 2020, 2021 here. So I spent a lot of time obsessing over all of these tokens, which I don't do anymore. Analyzing market caps, developer activity, hype, what's coming in the future, which is a massive part of it. Like, crypto is a highly speculative asset. A lot of these, like a lot of the coins that I'm looking at, have very little actually going on, or they have a relatively small use case, yet their market cap is exponentially larger than what it should be, in comparison to some single stocks where their market activity is huge, but their market cap is relatively small. There's a lot of speculation in crypto, as with any market, but things just get way too overinflated. My kind of worst case scenario for Ethereum is if it loses this area down here. Like, if we start trading back below 1,000, that's a real big concern for me. Specifically, like, after taking this high, like, if it's something, do I even have anymore? Yeah, like, if it's like this M pattern, like, that's really not a good sign for me. It looks like, I mean, that's not even an M. That's like a weighted M, right? It's like, but if we take a look at like a lot of altcoins, like, they're all in a similar position where it's just this M shape and they struggle to regain new highs, which is fine, because I mean, even Chainlink, right? If you were to buy here and it went back to these highs, that's like a 3x. So it's not like we need to get it to new all-time highs, but when I'm looking to buy these days, I'm looking for like a long-term hold that I don't have to worry about, which is why Bitcoin is kind of perfect in that respect. Nothing will beat the S&P in that kind of aspect. However, year on year, Bitcoin has just been phenomenal. Take a look at the previous 12 years. I mean, this goes back to what, 2017, pretty much when I started. I probably use TradingView more in the past week than I have during the past year. General rule of thumb, peak to trough. From the corrective structure as well. I mean, I really like this level at 50k. I might just stick some pending orders in there to just buy. Like, if we have this sort of thing, I did a really interesting interview with DOQ the other day, which should be released soon. And he talks a real good bull case for crypto. He's super knowledgeable, super into crypto as well as trading. And it was a great conversation to have. And, we had this conversation the day before we had the big, like, 12% dip last week. And that's when I started DCAing in, and then it absolutely caked it the next day, which is unfortunate, but it is what it is. This is what I would like to see over the next couple of years, is the ability to accumulate, sort of like what we had down here. Just build a position over a kind of a 2-year period. If we're starting now, 2026, 2028. If we can spend the next 2 years accumulating a position, even if it comes lower, even if it does something like that, like, the more you can accumulate, in my opinion, the better. That's not financial advice, just FYI to anybody listening to this. It's the same with the S&P, right? In fact, let's just look at the SPX. I mean, the SPX is just a big green dildo, right? I mean, this just... The S&P, like, you can't... I think it's David Bell that says just don't bet against the US economy. I mean, look at that. Every crash, like, when this sort of thing happens, how much is that? Was this in COVID? Yeah. It's a 35% dip on the S&P. I mean, I wish at the time I had more liquid cash because I'd be going pedal to the metal, getting as much liquidity into that market as possible. Because we know with the S&P specifically, like I say, you're basically betting on the success of the US economy. Now, if the US economy fails and falls apart, we have more important things to worry about than how much money you have in your back pocket, in my opinion. Like if the S&P was to go to zero, that would mean Google, Facebook, or Google, Meta, Nvidia, Apple, all of these companies have gone to zero as well, simultaneously at the same time. And is that going to happen? It's unlikely. Is it likely that we'll see a 20, 30, 40, 50% correction? Absolutely. We've seen it here. We've seen it here. We've seen it here, here, even here, you know, back here as well. Every time this happens, we should be thanking the lords above us that they're giving us an opportunity to accumulate more. But anyway, that's my rant over for the day. That's I'm seeing the market right now in at least in crypto and equities. It's just long-term holds. I think crypto is coming lower. I would like to see it come lower. I'm probably saying that I see it coming lower because I'm biased to what I want to see. I would like to see a cheaper Bitcoin because I'd like to buy a cheaper Bitcoin. But I guess only time will tell. I think if we close the week down here, that's a really nice sign from just a basic market structure perspective, right? Something that everybody knows, higher lows, lower highs, all that sort of stuff. If we can do something like that and then start building back up, fantastic. I'm here for that. That's what I want to see. There's no rush. We don't need to get rich quick overnight. We don't need Bitcoin to hit 1 million overnight. In fact, if it's going to take 10 years, if it's going to take 20 years, I rather it would, because it gives us the opportunity now. You know, whilst it's, I don't want to say it's cheap because, you know, that would constitute me, you know, saying it's goodbye. But whilst it's lower than what your long-term targets are, just take the opportunity as much as you can. Okay. Metals. Gold smashed me up earlier, I can't lie. This ATR period, like this period here, all of this, I mean, it's just so difficult to trade. It's so different to what gold has been for the past few years, that it's just very, very like if you can analyze this sort of price action correctly with the updated ATR values and you know, not get your ass handed to you on specific days, then fair play to you. You're a better trader than I am. But I actually had to turn gold off on my portfolio for some time just because the ATR value was so high. Therefore, my stops were larger than they should have been, and it skews all of my results. It skews my data. And typically when that sort of thing happens, you know what Sod's law is. You're always going to lose. So I think I've taken 3 trades since the ATR values have been higher. Therefore, my stops, the value of my stop is slightly higher than what it should be, as in like $10 or $20. Nothing major, but these things add up. And it's just typically the 3 trades I've taken have all been losers. It's kind of like typical, right? Whereas, you know, you're never going to get the winning trades when your target's more a higher value than it should be. It's just, it is what it is. But yeah, I don't really have any thoughts on metals. I mean, silver still looks disgraceful. Still look at platinum. I mean, platinum as well. I kind of like this. At least there's like there's a floor built out. Like this area is kind of looking a bit like a floor, right? Whereas silver doesn't really have that, in my opinion. Silver doesn't really have this area. I mean, I guess it does. It's just not as prominent. But again, I'm still trading silver. I still have it active, but it's just, damn. If you can trade this, fair play to you. And I know there's people who would have shorted the top and held it all the way down. I know there's people who've held it long for 5 years. And again, fair play. You have nuts that not many people do. But as of right now, like the ATR of these assets is just insane. FX, I don't really have an opinion on, to be completely honest. Dollar yen volatility has picked up again recently. I was doing some analysis similar to what Blaine was doing the other day, where we were looking at long side versus short side. Take a look. Where's custom analysis? Okay, so my portfolio is up currently at master level 9.2%, but you can see I've eliminated all my long trades and my short side is only at 1.23%. So 8% roughly has come from being long. Now that's not surprising considering I think my two largest assets is dollar yen and gold. So it's not surprising that the majority of my P&L has come from being long. So I'm not expecting, I'm still profitable on the short side, right? I'm still making money. It's still positive, 0.88% drawdown, 1.23% return. Like it's still a positive curve, but I'm expecting a bit of a slower period at the moment until we kind of, whether we even continue this trend. I really don't care. Maybe you can tell that by now. Compared to like the old streams I used to do where we'd take a look at markets, I just don't really give a monkeys anymore because it doesn't really matter to me. All I take a look at these days is data and, trying to build successful strategies. And yes, I am building long only strategies. I would never build a short only strategy because I think you're destined to fail. Most markets are designed in a way that they should increase over time. But I'm more concerned about, okay, what does my data tell me as opposed to what does a chart tell me? So yeah, what else do we have? Screener, Rocket Lab, I sold that. We got rid of that. Let's bring it back up. Rocket Lab. I didn't have enough skin in the game on Rocket Lab. I think I bought somewhere down here and then I sold somewhere up here. I didn't have enough skin in the game to hold forever. I'm massively into stocks. It's not my kind of game. Crypto is more my kind of game, but even that, I'm way out of touch. But yeah, okay, let's take a look at, I'm currently, there we go, perfect. I'm currently testing some strategies on SQX for the S&P. So I've already done, I built just short of 2,000 strategies on the SPX or on the S&P 500. I've already done walk forward analysis. I've already done sequential optimizations. I've already done some Monte Carlos. I've already stress tested slippage. I've stress tested the spread. And I've still got 186 strategies apparently that are profitable, which I doubt very much there's 186 of these that are profitable. So I'm still trying to break these down. I guess maybe one test I could do now is if we trade on the H1 instead. So let's go results 2 to testing 3. Let's change to H1 and see how it performs. This isn't, crap. Let me take sequential optimizations off, otherwise that's going to take hours. Yeah, maybe we'll test one of these in strategy on MetaTrader as well. I don't know how much I necessarily believe that 186. It seems very, very high to me, and like I say, I've stress tested the spread and the slippage quite aggressively. I've done in-sample, out-of-sample data, walk forward optimizations and analysis, sequential optimizations and stuff. Okay, none of them work on the H1, which is what it is. So sometimes, like, it's a nice sign if your strategies work on any asset, any time frame. However, what I find is that it doesn't really matter. If I built a system specifically to trade indices, specifically to trade intraday, I'm less bothered about whether it works on euro dollar on the daily time frame. There's some people who are like, it has to work on every asset, it has to work on every time frame, and I get that. I understand that. That shows that a system is has like a high factor of stability, and it's highly robust because you could run it on multiple assets. However, I kind of like to build with an idea in mind specific to a market and the dynamic of that market that I'm trading. For example, if I'm trading indices, I'm more likely to build a long only system than if I'm building, for euro dollar again. So I will customize my strategies based on the markets that I'm trading. But what I'm going to do is we're going to take the most stable one. So now that I've got these 186 strategies, what I don't do is filter it by the most amount of money made. We'll see the equity curve is a little bit sharper. I don't do it by profit factor either, because I think the profit factor in strategy quant is awful, to be completely honest, because the data never 100% aligns with the true tick data that you get in MetaTrader. So what I do is I organize it by stability. So I take a look at the stability of the curve, because everything for me is about robustness, stability, and repeatability. I don't care how much systems make. If it makes $2,000, if it makes $3,000, if it makes $5,000 over my final backtest period, I don't really care as long as it's profitable and hits all my other metrics. So I want to know which system is most stable. So you can see here, this has a stability of 0.9, which is great. That's scored out of 1. So what I'm going to do, take a look at the sequential optimizations. So the great thing about strategy quant sequential optimizations is it doesn't just find the area that makes the most return, it finds the most stable area, as you can see, stable area found. So what I'm going to do is apply those optimized values and then pull the source code. So if we pull the source code, and then this is on my server, so we'll copy that. Let's put it down. We're in the strategy tester, so we're going to have to put the strategy across. I'm copying that to my own PC. Now remember, that was built on my dedicated server, so I pulled that across to my own PC, opening up in MQL5 or in my meta editor. I'm going to save as into advisors, my testing folder, and we're going to go US 500 M15. Is it M15? Sure it was. M15, yeah. Okay, so we're going to save that in that folder. We're going to compile the code, put this down, and then refresh. Let's take a look. What is it? Strategy. It's this one. Yeah, SP 500, M15. Let's put every tick based on real ticks. I don't think this works for the S&P sometimes, for some reason. Yeah, it's a NASDAQ that's fine on based on real ticks. Okay, let's run this test. Yeah, for some reason, when I'm testing on MetaTrader, the only two assets I've noticed that don't work based on real ticks is the S&P and EuroCAD, funnily enough. So I run those on every tick. And then sometimes what I'll do is I'll download another set of data and run it on that as well, just to kind of verify. So I might download Ducascopy data and run it on there as well and see if the results are similar based on the different broker feeds. If it works on every tick based on real ticks, I'm less sort of careful about that in terms of testing it on another broker or on another data feed. But it's always good practice to test on different feeds. And again, it's just one of those robustness checks that you can add into your process. The main thing is our job as a multi-strat provider is to build less high quality systems than more low quality systems. I'm always an advocate, and anybody who I talk to privately, I'm always like, just build more, build, keep building strategies, have a load in the locker that are all trading separately from your main accounts, right? So that you're always constantly testing trading strategies live. But your job is to break these systems. It's not to try and find the next one to add to a portfolio. I could do that easily. But the testing period should be 3 to 6 months. You have the initial build, you have the initial robustness checks, you have all of the checks that you do prior to setting it live into an account. The easiest thing to do then is to get a second Darwinex Zero account, implement all of your strategies on there, because it's going to cost you, what, €45 a month to test your systems. That is an account that you bake into your costs as an algo trader. It's not necessarily an account where you go, this needs to pay me money now. It's an account where you go, well, I'm using this account to, I mean, you might earn money from it. I earn money from my testing Darwin, but it's an account where you go, this is part of my process to being a professional asset manager or professional portfolio manager. You have your softwares where you build the strategies, whether you use Quant Connect, Strategy Quant, FX Dreamer, Perfect AI, whether you build the code manually, all this sort of stuff. Then you have your server. It's another cost that you need. Then you have your Darwinex Zero account. That's your playground, because you're testing it in a live server with real conditions, but you're not putting any actual live capital at stake. It's perfect. I always say it's perfect because if you're building a strategy that has higher margin requirements as well, you can run it on 100K or $1 million on the futures account. Whereas if you needed to test that system live, you're going to have to put up 100K or $1 million. Whereas at Darwinex Zero, you can literally do it for, you know, the price of going out for a meal every month, you know. So, okay, strategy. I mean, the curve looks good. Of course, it's the certain periods where it's more volatile than the rest. I'm taking an initial look. 1.68 PF, max DD 0.29. Oh, okay, so we can ramp that up to 2.5. Let's go. We're going to run the test again at 2.5 times our risk. So average loss $18. Yeah, so 50. Let's go 0.3. We'll ramp it up by 0.3. What's important as well is to remember the contract size. So, for example, I was in an S&P trade today on Darwinex. On Darwinex, the contract size is 1. On FTMO, the contract size is 10. So you have to account for that in your lot size. I didn't, and I wondered why my P&L wasn't reflected based on the risk multiplier that I implement on those accounts. And it's because I hadn't took the contract size into account. So a bit of a word of warning for anybody who's running an S&P strategy. I mean, always check these. It's good practice to check this on every single system that you set live. Check the contract size. I mean, usually for FX, it's going to be the same. But for indices and metals, it's always good practice to check. You'll notice as well that the deposit load increases over time. That's 2 reasons. As the account grows, the deposit load would come down because you're using less percentage of a growing account, of course. However, as the S&P grows or the gold grows, if you're running a test like this, you know, if the S&P was 3,000 points down here and it's 6,000 points over here, I'm going to be using my contract I'm trading is worth more, right? So I'm going to be using more margin to trade that. So again, an important one to remember. I used to ignore the deposit load, but it's a really key metric for me to find any errors in my systems that I shouldn't have overlooked. For example, if the deposit load is very stable and then all of a sudden there's like, let me see if I've got an example of what I'm trying to say. No, you just can't have it. Yeah, so this is a system that I've been testing. This it's a mean reversion on dollar CAD. The problem with this, and if anybody can see the problem based on what I've just said, let me know in the comments, because it stands out to me now. It stands out like a sore thumb. Whereas when I implemented this system, I was, like I said, I was less bothered about the deposit load. I didn't look at that as kind of I didn't look at it for any validation, whereas I do now. And I think it's really, really important to do so. White Rose, with XAQP, would you run the same strategies and risk on props like FTMO? Guess that would take longer to pass. Yeah, I do. So I have 2 portfolios. I have XAQP, which is this one, and then I have LVFZ, which is this portfolio. This is an account set up for an investor that I know, or a fund that I know. They haven't funded it yet. This is also a fund that I'm trading with. And then this is the charity Darwin. And then my FTMO accounts are these two here. Let's make that smaller. So you can see I've got all my strategies from both portfolios set on my FTMOs, and I run both at 3.5 times the risk. Now, it was going really well. I'll bring up my FTMO charts. A little bit devoed because every time I get to 9% profit, I just do my ass. It's so frustrating, but it is what it is. It'll take time. Like this is the great thing with trading like a multi-strat portfolio is that you know you will pass the accounts. It's just a matter of time, as in like you've just got to give it enough time. I also run them at higher risk too, so it is going to be more volatile. So we got to 9% or just shy of 9% over here. We caked it, or you know, the equity curve started decreasing. Then I had a rogue system which lost 5k in one day, I think, on a 200k. You know, so if it wasn't for that strategy, yeah, I would have passed. I'd be on phase 2, but it's not. Is what it is. And then it grinded all the way back up to I think it got to 219. Didn't show on there, but I think this just shows the balance. It doesn't show the equity. I think the equity was 219, and then again it's just like sold off pretty aggressively. So it's a little bit devastating, but it is what it is. It's still up. What we up 7% equity at the minute. So just got to give it a couple of months. I'm hoping by April I'll at least be on phase 2 and well on the way to passing that. But yeah, I do trade FTMO accounts with that. Ravinder, hello brother, how are we doing? Okay, so back to this. I brought up this, didn't I? So for the guys who were here 5 seconds ago, I asked, is there anything here that sticks out like a sore thumb? Well, what you should have thought is the deposit load kind of looks like stairs. Okay, it goes up, it goes down, it goes up, and it goes down. Now that tells me now that I haven't got this strategy set to one entry at a time. So I haven't got something in there that says if it's already active, don't take another entry. Hence why the volume is going up and going up and going up. Now with a mean reversion system, that can, you know, get you into a pickle quite quickly. So I think over here is the max. That looks like what, 5 orders? 1, 2, 3, 4, 5. So yeah, there's 5 orders in here. Now, what can happen? Let's just pull up dollar count. What can happen is that can be due to let's find an example. That can be due to a period like this, you know, where price hasn't really moved anywhere, and it remains like overbought or oversold, and the same condition is ticked every day. So what it'll do is it'll just keep selling. Now, it looks good because we go, well, the curve is pretty good, the curve is pretty stable, but that gives us a bit of tail risk where we go, well, if that happens again, luckily it worked out this time, but what if it happens the next time and all of those positions lose? And then it's still overbought or oversold, so it enters again, and then it enters again because the trend just doesn't stop. And that's something that these days I don't like having that exposure to. And so I have been trying ways. I can't remember if was it on my laptop I was testing it, or on here. I'm sure it was on my laptop. Yeah, it must have been on my laptop I was testing that. Yeah, so I was getting good results with it on my laptop with my tests that I was doing, but it wasn't as good as this. It was okay. However, the great thing for me was that I'd removed all the tail risk because the deposit load was constant. If I was in a position, it wouldn't double up, it wouldn't triple up, it wouldn't quadruple up. So that's a change that I need to make to the portfolio this week. I just haven't got back around to doing it. Luckily, this doesn't trade too often. It's taken 94 trades over an 8-year period, so it's not a really active system. And the good thing is, when you're operating a multi-strat, you generally have time. So if you have an idea, you have time from thinking about the idea to implementing it. Something like this is, in my opinion, quite urgent, but that doesn't mean that it has to be done within the next 10 minutes. It's not urgent as in you're overexposed right now. It's something that in future we have a bit of tail risk. So I have a couple of days to kind of think, okay, how am I going to overcome this? Let's set a plan forward. What do I need to achieve here? Well, what I need to achieve is risk asymmetry. So I don't want to be doubling up on certain trades just because price continues to go against me. Otherwise, we may as well just martingale. What do I not want to achieve? Well, what I don't want to achieve is, a subpar performance because I basically blow the strategy up. Now, if that happens, if I can't get something to work, then I will remove this system from the portfolio because I don't want to leave that tail risk in the market, if that makes sense. In fact, what I will do now, just as a point to you guys, is I will disable that strategy. Where are we? Dollar CAD. I mean, I don't think, to be honest, there's no fear of it being tagged today. I wouldn't imagine anyway. In fact, no. I'll wait until the close of play today to deactivate it. Yeah, I'll wait until the close of play to deactivate that. But then what I'm going to do before the end of this week, I want to get it either changed so that it's only taking one trade per day, which I have on all of my other mean reversion systems, or get it completely removed from the portfolio. I did add a mean reversion in on the S&P. Was it doubled it up? Don't know why it's done that. Let's remove one of them. Yeah, so this is a mean reversion system that I put on the S&P this week, which is the same strategy. So it's the same system that I have running on all my other mean reversion assets. But this, if we take a look at the deposit load on here, you can see it's very, very stable throughout the whole thing. This is what I want the curve to look like on dollar CAD. And in fact, I built it on the S&P to replace dollar CAD if I needed to. But I added the S&P in anyway because it just looks so good. What was it doing? What we were doing? We were looking at this strategy, weren't we? Okay, so profit factor 1.69, 0.83% drawdown, 6.9% return. That's solid. What's the last one that we did? Inputs. Okay, so this is using Keltner channels and Bollinger Bands, which personally is like my favorite duo. I have so many strategies built from Strategy Quant with that kind of setup, and they're just phenomenal. When you combine Bollinger Bands and Keltner channels, like it works really, really, really well. So we're going to go BB and KC. I mean, you can see the next one, BB and KC, Bollinger Bands and Keltner channels. Same again, SP 500. So this is how I track all of my systems. BB, Bollinger Bands, and KC. So I track all of my strategies so I know what I have, what phase it's in. And so, of course, LDF said my second Darwin is my playground before it gets moved to XAQP. So let's take a note of all these. So PF 169. The sharp, I need to go through these sharps and replace them because MetaTrader over-exaggerates these sharps. So 4.62 is definitely not 4.62. And I'll show you a way to get a better version of that in a second. 0.83% drawdown, and the return is 6.94. 6.9, oh, not 694, 6.94. We have magic number. And then what I'm going to do as well is save this report. SP 500. BB and KC. Now we're saving that. Now what I'm going to do, actually I need the browser there, is we're going to bring this up, Keen-based trading, report analyzer pro. Then I'm going to drop that file into here. which was this one. Is it that one? It's not the one, is it? Earlier said this one. Get rid of that. 413 trades. Is that correct? 413. Yeah. So that's the right one. So we take a look down below. Okay. So this just shows us in a different user interface and change it to percent. It says 18%. It's definitely not right. Ha! I think it's not calculate. I think it calculated with both of the reports on. Try it one more time. That looks more. There we go. 7%. That's more in line. Okay, so 2.87% or 2.87, sorry, Sharpe ratio, which is way more in line with what I would expect than 4.62. But I use this to basically just get a different kind of look into my statistics, and I use it because the Sharpe ratio is more accurate than Quant Analyzer and MetaTrader. Quant Analyzer usually butchers the Sharpe, MetaTrader overinflates the Sharpe. So now what we do is open this up. You can see I've got some settings in here. So what I'm going to do is take a screenshot of the settings that I put in, just so that if I ever lose, like if I accidentally click off the chart on my server and remove the strategy, I know what settings I had set. The main thing here is, of course, the strategy settings, but also the money management. I want to know how much I'm risking per trade, etc. The tick quality is usually like this on the S&P. The start's a little bit shoddy. That's because I'm running it on every tick and not every tick based on real ticks, just FYI. Results. So I take a screenshot of those results. I also take a screenshot of the curve with the deposit load, so I can refer back to that whenever I need. And then you can see I've got two more. So the back testing, I'm going to take from Strategy Quant. So there's two things I take a screenshot of here, and that's your own time, this chart, and then I also take a screenshot of the equity chart. Again, just for me to refer back to if I ever need. And then last but not least is I want to run a Monte Carlo. Main thing when running a Monte Carlo is you don't want the system to blow up just based on randomized outcomes. So what a Monte Carlo will do is it will take all of the results, it will shuffle them up, provide you with a randomized outcome. If your strategy is based on the set outcomes that you had or the sequence of outcomes that you had, and running a Monte Carlo blows up, it's obviously not very robust because it was based on the sequence of wins and sequence of losses that you had. If we go BB and KC, we'll add that into Quant Analyzer. So you can see the equity chart over here. Let's take a look at the biggest stagnation period. Okay, so the biggest period of stagnation for this system was 255 days. So you can see it was just chopping about here, which is interesting. It is what it is. That's nothing too bad. Let's move the stagnation. Okay, so long. Okay, so it's about 50-50 from what I can see. Short P&L. Oh, that's why. There we go. Yeah, it's about 50-50 long and short P&L, which is super, super interesting. P&L by weekday, Wednesday, massive. Interesting. By close time. Interesting. So it didn't, I mean, it did. It basically didn't go short the whole of 2025. Okay, interesting. So we're going to go Monte Carlo on the left. I'm just going to do 100 simulations because streaming and doing any more than 100 is going to blow my PC up. So again, what we want to see here is essentially what we don't want to see is a massive drop in the return to drawdown. Now, this is calculating using balance-based drawdown, which is not ideal because we know that the max drawdown was 0.8%. Whereas with randomized outcomes in this Monte Carlo, we can say with 95% confidence that the percentage return would drop 0.3. Okay, that's fine. The max drawdown in this case would have doubled, but we know that the max DD equity base was higher than that anyway. So that's not really too much of a concern to me. The strategy still has alpha, which is kind of my main concern here. I'm not over reliant on that sequence of events. It's much easier to see here where we have the 100 randomized outcomes and you can see they're all still profitable, which is fantastic. It's kind of an easier way to view than looking at the results with confidence level. So again, I just take a screenshot of both of those. So I have all of my strategy information here that I can refer back to if and when I need them. And now what I do is move them. If we go, testing. This one is this one, right? So we go, let's copy the name of the strategy. I'm going to copy these files. Again, this is on my PC. I'm going to go over to my, I call it a VPS, but it's a dedicated server. This is LVFZ. So I'm going to bring it onto here. I'm also going to put this on the charity Darwin, I think. In fact, no, I've already got a system on the charity Darwin for the S&P on Bollinger. So I'm not going to do that. Okay, so I've now pasted it into here. I'll refresh that. I'm also going to do the same for my two FTMO accounts. PL5, experts, advisors, LVFZ, paste, refresh. The same again over here. This is where being a multi-strat trader has its drawbacks because there's a lot of fiddling about. Now, LVFZ, I want to open a new chart on the S&P. I'll bring that across. M15, change the template. Okay, now we'll go SP, Bollinger Bands and counter channels. Change the magic number 351115. Just check those are the same. It should be 0.3. Okay, so change size to 0.3. Okay, and then that strategy is now active on LVFZ. So what I'm doing now, again, it's passed all my robustness checks. I did a load before we jumped on the session. It's passed all of those checks and was the strongest out of the systems that we built on Strategy Quant. And now it's kind of going into its 3-month live phase. So what I'll be doing is I'll monitor the performance over the next 3 months. Again, I'm not bothered. This is the thing with this portfolio with LVFZ, which I'm always open about. Like this portfolio, I don't care whether it wins, loses, whether it makes money, loses money. I'm not bothered. The point of this is to, if it makes money, it makes money. Great. I actually took a performance fee from this today. It landed in my bank today, which is great. But the point of this is to get the live data to back up all of this, because all of this is just nonsense, right? I'll be honest. All of this is nonsense. This is a way for me to track how I built the strategy, how I understand the system, what it's doing, etc., and the sorts of returns that all of my testing has produced. However, this is all useless until I have live data. Does it get slipped? Can it calculate the stops? Does it perform well? Is it overfit? I don't know any of that until I've run it live. And so, like I say, the purpose of this, Darwin, isn't to make a massive return. It's to test the strategies that I want to pull across to XAQP. Okay, rant over. Back into the server. Now I'm going to bring the same over here. US 500. I'm going to bring the strategy across. Allow algo trading zone 351,115. Using the magic number. So if I do an analysis of my accounts, I can filter it by magic number and I can see how that specific strategy is performing, because it will get lost within all of the other systems on here. So I'm running it at 0.3 on the master, which means this would be 3 times that, which would be 0.9, and then double that, the 1.8, because it's double the account balance. So it'd be 1.8, but then it's 10 contracts. So technically it should be 10 point or 18 lots. I'm not trading that with 18 lots. We'll just do 1.8 for now. I'm happy to run that at lower risk anyway. Yeah, 18 just seems overkill for me, especially with this many strategies. I'm also keen to see the correlation between there we go. So that strategy is loaded in. Let's move my server off the screen. I'm keen to see the correlation between that S&P strategy and another one that I built. This Bollinger Band breakout system. So what I'm going to do is create them into a portfolio. Just name the portfolio SP500. Analyze portfolio correlation. Okay, interesting. So what we can do is, if we take a look at the equity chart, let's do sub equities only. You can see I've got both of the systems loaded. So the Bollinger Bands and Kellner channels, that's what I've just set live, the one that you saw me take all the information down for. And then I've got an M15 S&P strategy as well that trades Bollinger Bands breakouts. So what I'm doing here is I'm analyzing the correlation between the two, i.e. do they win at the same time and do they lose at the same time? And you can see the curves are fairly similar, which you would expect anyway if they're both profitable strategies. You would expect them to go up and to the right, and they have these spikes like here, where I'm presuming price went parabolic or absolutely caped it, and it caught the break on both. But there are periods of time where, like over here, the Keltner channels perform slightly better. There's period. I mean, yeah, even here, like there's a bit of a disparity between the two strategies. So what we want to understand on an hourly, daily, weekly, and monthly basis, how correlated are they? I.e., is it just the same strategy dressed up in different clothes? Because there's no point in us having that. At least at my master portfolio level. So on LVFZ, I'm not too bothered about the portfolio correlation specifically, because out of these two strategies, maybe only one of them performs live. So even though they might be highly correlated, when I'm testing them live, one of them might blow up, one of them might perform well. I wouldn't know which one it was if I didn't run them both live. So yes, when it goes into XAQP, which is my main portfolio, I will do a whole lot more portfolio correlation testing. I will reduce risk on some strategies if needs be. Whereas with LVFZ, I'm less bothered about that. I'm more bothered about getting that live data to be able to make the decision. So we can also check correlation by P&L, close trades, open trades. So if we just go open trades. Okay, interesting. Interesting. Yeah, so on the hour, they open trades at a similar time. The P&L is uncorrelated. Okay, day, number of open trades. Okay, interesting. Okay, so the max stagnation together is 388 days, which is pretty much from the testing period beginning. I think that's due to the Keltner channels takes a little bit more of a hit, is it? Oh no, the Keltner channel supports it a little bit more. It's the Bollinger Band breakout that takes a little bit more of a hit. Okay, which is fine. That's okay. Let's do a Monte Carlo on them together. Okay, so looking a little bit more stable. The return doesn't drop too much. The max DD stays roughly where it is. I know what I haven't done. What an idiot. Doubled the balance. I was going to say that the profit didn't look right. Okay, so 12.68% profit on the back test with a just under 1% drawdown. 95% confidence level is 1.35% drawdown with a 12.1% return. Fantastic. Happy with that. Monte Carlo looks fantastic. Super, super happy with that. I probably wouldn't run them both live on XAQP. However, for LVFZ, like I say, I'm not too bothered. I'm happy to run them. And to recap, that is what the strategy looked like. What we'll do before we finish is we'll run it quickly on visual mode if it's going to let us. It's going to let us. Oh, my MetaTrader stopped working for some reason. Okay, interesting. Is what it is. Maybe we'll do that in tomorrow's session. Okay, so I'm gonna call an end to the session here, guys, because I think my kids are waiting downstairs for me to go and cook them dinner, and starving kids does not make for a happy dad. So I'm gonna leave the session here. We'll be back tomorrow at 4 p.m. UK time. I appreciate everybody for tuning in today. Thank you all for joining, and for anybody who's posted a comment either on X or YouTube. It's always appreciated. I like having these sessions where you guys get involved, ask questions, and kind of give me topics I can go over. So I appreciate every single one of you guys. I hope you all have a fantastic rest of your morning, afternoon, or evening, wherever you're watching this from in the world. And I will see you tomorrow. Have a fantastic rest of your day, guys.